Hi there, Eric here with Portfolio 24. Today I'm going to talk about one of the IPOs that is going to launch on the stock market this week, and this is Asana. Let's see what Asana is all about. First of all, I have to start with a disclaimer. On this channel, we talk a lot about stocks and options, and remember that these are very risky and you can lose all of your money. You can lose some of your money on stocks and probably all of your money on options, so you have to be very careful. This is not financial advice. You need to consult with a registered financial professional. So, what does Asana do? On their website, they claim that they help humanity thrive by enabling the world's teams to work together effortlessly. They help teams orchestrate their work so they can achieve their missions faster. So they claim to have about 3.2 million activated accounts, 75,000 paying customers, 1.2 million paid users in almost every single country on earth. They have clients in most companies. You can see a long list of them here. Basically, this is a SaaS company. This is software as a service company, which means that you basically pay a subscription fee, which is billed either monthly or annually, and that's how they make their money. They have a freemium model, which means that you start with free software, and if you want some more features, then you can start paying. So a lot of SaaS companies use this business model. So when you go to your website, you list some of the features that they have. With Asana, you can build projects, coordinate tasks. You can set goals, timelines, monitor the progress of your projects. Distribute the work amongst your team members. So that's what basically Asana does. Company was founded by one of the co-founders of Facebook. I think this guy used to be the CTO of Facebook, and he left in 2008 to start Asana. So far, over the past several years, they've raised about $413 million. Their last raise was actually in June of 2020. At that time, the company was valued at about $1.5 billion. And what they're doing in terms of an IPO is it's going to be a direct listing, which means that they are not going through a bank that will buy the shares and then sell them to us. They're just going to list the shares directly, and the company shareholders are going to start selling their shares on the stock market. So let's look at the money. Let's look at the revenue that they're generating. All this information is found on their Form S1, which they filed with the SEC. If you look at it on the very first line, which talks about revenue, you can see that for 2020, their revenue is 142, which this actually depends on when their financial year ends. Their financial year ends in January 31st. So for January 31st, 2020, their revenue was $142 million as compared to $76 million in 2019. So that's almost 2 times. And if you look at the first 3 months of this year for them, that's between February and April of 2020, they made about $47 million, which is almost twice what they made in 2019 during the same period. So they are actually growing pretty well. I think they're growing at about anywhere from 80 to 100% growth rate. One of the other things I like to look at on this form is to see how much they're actually spending on sales and marketing. And if you look at it, they're spending probably close to 70-80% of their money goes towards sales and marketing. That's a pretty big number, so that probably gives us a good reason why they are still losing money so far. So they are spending a lot on sales and marketing, so you have to keep that in mind as you value the company. So when we want to invest in any company, whether the company is currently listed on the stock market or is still an IPO or is even a pre-IPO, I have personally invested in more than 40 startups. These are all pre-IPO companies. So what I usually do is I use annual revenue multiples. For most SaaS companies, the annual revenue multiples that you use will range anywhere from 10 to 20 or 30. There are some SaaS companies currently listed, like take for example Snowflake. I think their multiple is somewhere around 60 to 100, which is kind of insane. That's just too high. I think for Zoom is also pretty high, anywhere from 40 to 50. That's pretty high. So what you do is you take how much they've made, the company is going to make for 1 year, for the current year, or for the next year, and then multiply it by 10. Let's say you want to use annual revenue multiple of 10. So in the case of Asana in 2020, you can assume that they're going to make about $200 million because for the first 3 months they made about 47 million. So probably they make about $200 million this year. So if you use that formula, then your valuation would be anywhere would be about, let's say if you take 10 times 10 times $200 million, then your valuation will be about $2 billion. So interestingly, the company actually had a raise in June of 2020, which is just a few months ago. At that time, the company was valued at $1.5 billion. There's actually a share price. The share price was $15.82. That was how much the shares were going for in June of 2020. So this gives you kind of an idea of how much you want to value the company at. When you try to invest in the company. So at this point in time, the valuation, in my point of view, would vary. Probably anywhere from 2 to 6 billion. If you can get a number closer to 2 billion, that's better. So if you can get the shares, probably anywhere from closer to $20, that would be good. $30 is probably still a good. You know, 40, 50 is probably on the high side. But it wouldn't surprise me. We've had some listings now and the shares have just gone up so much. Like Snowflake, for example. I don't think I would buy Snowflake. Just my opinion. You need to consult with your financial advisor. But, I hope the information that we provided here gives you an idea of how to gauge the listing price and decide whether you want to buy or not. So what are some of the risk factors for this company? First of all, they have a lot of competitors. I'm just listing a few of them here. You have Team, you have Monday, you have Airtable, you have Trello. So many of them. There are so many competitors. Some of them are listed on the stock market. Some of them are still private companies. And as a matter of fact, they've been in business since 2008. They have a very prominent founder. The guy is the co-founder of Facebook, but they're still losing money. So I don't know what that tells you about the business, but that's something to think about as you decide whether you want to invest in the company or not. The other question to ask is, will the growth slow down? If you look at their Form S1, they did list their revenue for 2019 and 2020, but I don't have the revenue for 2017, 2018. So it's difficult to tell whether, the revenue went up. You have a revenue growth of close to 100%. Is it going to go up by 100% next year? If they're going to have revenue growth of 100% for next year, then that will be a different issue. Their valuation will be much higher than what you would think right now. But it's very difficult to tell, especially when they have so many competitors like Team, Monday, Airtable, and a lot of them are advertising every single day. So the question is, will I buy this stock? Well, like I said, if they list and it's going anywhere closer to $20-$30, I'll probably buy it. But if it's far much higher than that, I'll just wait and see. Hopefully it drops down. Like I said, this is not financial advice. Make sure that you do your own due diligence, consult with a financial professional who is registered, who can give you more detailed recommendations. I hope this video was helpful. If you like it, please smash the like button. The one thing that we'll be doing on this channel is that we're going to be talking a lot about pre-IPOs. So you may want to subscribe to the channel if you are interested in pre-IPOs. We're going to start releasing a set of videos about different pre-IPOs, actually evaluating them. It's a very exciting time to be an investor right now. And one other thing is you can probably share the video. It may help somebody. May help one of your friends or family members or a co-worker. I hope this video was helpful. I hope you have a wonderfully blessed day.